I'd hate to define this as a parting shot by someone like Chair Yellen, but people get the sense that it's the end of that era and the beginning of a new one. Is that what it is?
It's hard to say. Only time will tell, and there'll be a lot of continuity there. But look, we know in general regulation has been coming down, or lack of new regulation. In the financial sector, it's been more mixed. So I think you have to watch this very carefully. This is, as Charles pointed out, in our view, a one-off, and therefore the opportunity to participate in growth and GDP growth by the banking sector is pretty good. So
does the new Fed chair look a lot like the old one? As the new Fed chair, Chairman Powell, comes into play, what are you expecting from this guy?
More of the same. They've got to raise rates. They'll try to do it along with the conditions that permit that in the marketplace. Inflation, as we mentioned a few minutes ago, has got to be watched very carefully. If that gets ahead of itself, the Fed's going to have to get more aggressive.
George, if we step out from the regime that we've discussed over the last 17 or 18 minutes, does that mean the Federal Reserve becomes naturally even more unpredictable?
I don't think they're going to aim to be unpredictable. I mean, I think
they certainly won't aim to be, but you wonder whether it's a consequence of the data and the market backdrop that actually they may well could be.
Look, I mean, one thing is clear. They probably have not priced in fully all the fiscal stimulus, the potential for more spending. And as they kind of get mark to market and kind of get on the same page with other forecasts, they might see that they're behind the curve. And if that happens, I think they'll have plenty of opportunities to signal that they are behind the curve. The question then becomes, do they want to be behind the curve? Because, like, as Bob mentioned, they've wanted inflation for the last 10 years. So maybe they'll let it run a little hot.
And so they've been fighting deflation on and on and on. And now, all of a sudden, they're fighting inflation. That inflection point's kind of wild.
Is it a little premature to discuss them fighting inflation, though, after one payrolls report with wage growth close to 3?
Yes, but we could go there very quickly.
Chris?
We could go there very quickly. And I think there's a couple things about the Fed. Janet Yellen was probably the most dovish person on the face of the planet. Powell is also dovish, but you can't be that dovish. In addition to that, you have a new person. So there is uncertainty, and you have to price in that uncertainty.
Can I just challenge that view of Chair Yellen being a dovish chair? If she was truly a dove, would she not have waited for inflation to start ticking higher before she hiked interest rates? Because they hiked through the whole of last year with inflation trending lower, not higher.
This is the slowest Fed tightening cycle, I think, on history. And so, and rates are still exceptionally low. What we're looking at right now is, again, not to be too repetitive, but you're looking at exceptional fiscal policy on top of exceptional monetary policy. That's going to work. And it's not that the Fed's going to pound the table and say we're hawkish. It's the narrative. If you look back to Wednesday, I think that's a microcosm of what we're going to see in 18. On Wednesday, they had to characterize the economy and growth as slightly better. They had to characterize inflation as slightly better. And they'll be pushed to do that as well going forward.